The international aid sector has been dealing with significant challenges that have left many question marks about its future and financing model. The US aid freeze, coupled with budget cuts from Germany, the Netherlands and other key donor countries, is forcing international organizations to search and explore new sources of funding. Uganda's Development Bank is now also looking in the same direction.
The donor funding or concessional funding's priorities are kind of shifting or changing, for example, to climate finance and some other specific priorities. So in that case, there may not be resources available for some of the investments that we need to do, and therefore we have to look for other sources. And one of them is private capital as well. So how do we also leverage private capital and use private capital for development and to finance development projects.
Now that all eyes are on the private sector, the big question is it ready to handle big-ticket projects in infrastructure, social services and innovation?
How can we reposition? How can we reimagine? What are the kind of things that we should be doing? What should be our business models? All these need to kind of change to be able to align to the priorities that we are currently facing. So basically we're saying we cannot continue doing things the old way when everything around us is changing, and so we therefore have to change and adopt.
In terms of where we see the business going, initially for this year we should be able to invest over 500 billion, but the longer term outlook, again in line with what the managing director mentioned, is to continually explore developing partnerships, including the ones that support our financial base.
As pressure mounts, African countries are expected to exchange best practices on how national development banks can become engines of socio-economic transformation at the upcoming summit slated for September this year. Ronah Nahabwe, NTV Business.